Welcome to Beyond the Block. Today, we are going to demystify liquidity in the world of cryptocurrency. So let's get started. In simple terms, liquidity refers to the ease with which an asset, such as a cryptocurrency, can be bought or sold without causing significant price fluctuations. It is a measure of how quickly and smoothly an asset can be converted to cash or another asset. Liquidity is crucial in the crypto market, as it ensures that traders can enter or exit positions without impacting the price dramatically. A market with high liquidity will have a larger number of buyers and sellers, resulting in narrower bid-ask spreads. Bid-ask spreads represent the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept for an asset. In a liquid market, bid-ask spreads are usually small, indicating low transaction costs. Liquidity is influenced by various factors. One key factor is trading volume, which reflects the number of assets being traded within a given period. Higher trading volumes generally indicate higher liquidity. Another important factor is the presence of market makers. Market makers are individuals or entities that continuously offer to buy or sell an asset, providing liquidity to the market. Their presence ensures there is always someone willing to transact. Additionally, cryptocurrency exchanges play an essential role in liquidity. Popular exchanges with high trading volumes attract more buyers and sellers, resulting in increased liquidity. However, it's crucial to note that not all cryptocurrencies have the same level of liquidity. More established and widely traded cryptocurrencies like Bitcoin and Ethereum tend to have higher liquidity compared to smaller, less-known cryptocurrencies. Higher liquidity provides benefits to traders, such as faster execution of trades and reduced price volatility. It also attracts institutional investors who require sufficient liquidity to enter and exit positions smoothly. In conclusion, liquidity is a vital aspect of the crypto market, enabling seamless buying and selling of assets. It is affected by factors like trading volume, market makers, and the popularity of the exchange. Thank you for watching. If you found this information helpful, don't forget to like, comment, and subscribe to our channel for more insightful content.